Hello, guys and girls, and welcome back. It's your boy Big John here. The at's at the bottom of the screen if you'd like to listen to my music. So is all the relevant information I'll be speaking about in this video. And today, you know what we're at. We're going to be showing you how to control your risk management whilst trading with the Neo indicator. That's right, your risk management. Now, I know a lot of people keep blowing up their accounts, and I keep thinking, why? Why? Oh, why?
Perfect.
But never fear, Big John is here. I'm going to show you how you can control your risk management whilst trading this indicator. And really, it's just based on the fact that the indicator gives you several entries. So I hope you're going to like this one, guys and girls. Let's get into the video. Okay, as you can see, I am on my chart at the moment, and I have my Neo indicator set up on my chart. If you don't know how to put the Neo indicator on your chart, please watch the previous video. The link will be in the top right hand side of your screen. It will appear there. And what I'm just showing you here today is what seems to happen if you manage to get multiple entries or indications of entries appearing whilst using the Neo indicator. You see, what you can get here is you might get one trade that does go off, and then you might not get exactly towards the TP level you're looking for. Now, of course, the market doesn't have to hit any TP level at any given time, no matter what system you're using. It just really doesn't. You know, we're just individuals trading a much bigger machine at play. But if it does give you the opportunity for either a re-entry or the opportunity for more indications popping up, what I'd just like to explain here is the understanding of risk management. Now, why I say that is if you have a smaller account and you're trying to now enter a certain trade, and you're trying to, let's just say you're trying to get into this trade right here. Yep. So if we're looking at a take profit of about 70 pips here, that's fine. We could be looking for several different ways of how to make sure we can manage this trade while it's happening. We could be looking to put a break even when the trade gets to 35 pips of profit, yeah, which would have been around about this level here. And what I mean by a break even is that you would be able to now move your stop loss straight towards entry, maybe 10 pips in profit or something like that, and let the trade run. Of course, if that happened, you would have been stopped out in the trade right here, as you can see. But then again, at the same time, this is the whole point of risk management. Remember, your aim, even though you get such a simple setup coming towards you in terms of the indicator just giving you one indication of an entry or any types of indication of an entry, remember, you do not have to be greedy in this market. If you got stopped out in that trade, by all means, that's fine. It's okay. Don't beat yourself up. The world isn't against you. It's okay. Trust me. The next thing you want to be looking for here is that you can say, okay, if you are in this trade and you didn't move your stop loss to break even, then the next thing you're going to be looking at is waiting to see if, of course, the trade does go towards TP1. Now, here we can see the trade did not hit TP1 just yet, but then gave another re-entry. You see, here's where risk management really comes down into play here. Now, the previous entry was just over here. There is no reason, even if I got a second entry here appearing, for me to re-enter this trade. This trade has not even pulled back enough for me to say there is enough understanding or enough reason for me to now say, let me enter another position. I'm still holding leverage in my first position. There's no point. I might as well continue to hold that leverage, especially if it's giving me a second indication just right over here. If it's giving me my second indication right over here, there is no need for me to re-enter this trade at all. I'll leave my first position. Cool. Now, if you was to have put a break even when this second entry popped up, but your first position, yeah, went now into 35 pip profits, and then you put your stop loss to break even here at 35 pips, let's just say, this one would not have stopped you out because the market continued to just go down. As soon as it got to 35 pips around this region, it continued to go down. And around this area here is where you would have hit your original TP1. As you can see right here, you would have hit it. No problem, it would have been hit. But even if so, and you took partial profits off this trade, let's say you wanted to let it run a little bit more, there was a third entry that did appear on the system here. Now, I'm showing you all these entries because these are the entries that the system did give. This was prior to the release. This is what I had on my system when I was giving trades out to my VIPs and stuff like that. I would say, okay, there's a possible re-entry appearing, etc., etc., etc. But why I'm just showing you this is that if any given time you do get 2 indications of a trade or 3, if the entries are right beside each other, do not over leverage your account. The whole point of the Neo indicator is to give you simple, clean entries into the market. Now, we can never decide if it's going to push back, put you in drawdown, etc. But just to compensate for those types of things happening, you cannot over leverage your account. You might be saying, John, what do you mean about over leverage? And what is the definition of over leverage? I mean, what's going on here? Well, what I would say to you is that if you're starting with $250, you should not be trading more than 0.01. Personally, I tell every single person in my mentorship that really you want to only be trading 0.01 per $1,000 in your account. Don't listen to people out there saying trade 0.01 with $100 and then $200, 0.02, etc. Because you got to look at yourself in this way. Forex is something that is unpredictable at times because fundamentals is what moves the market in an unpredictable fashion. We might be technical analysis traders and some people are just fundamental traders, etc. But realistically, fundamentals is what will change any strategy for the better or for the worse. So for the fact that we can't understand what exact fundamentals are going out, because we can see previous chart data in terms of technical analysis in the chart, realistically, we're not going to be able to know what fundamentals are going to do to the chart. Even if we have seen previous technical analysis data, we won't know because they can make decisions in the news that could affect either way for a buy or continuation of a sell or whatever it might be. So on that fact, the only thing we can do to prepare ourselves is risk management. Don't enter all 3 of these trades if all the positions are close together. It makes no sense for yourself to do that. You want to get into a position where if the market was to continue moving up, then you got into more positions. But realistically here, if it did keep moving up, you would have just got stopped out and you would have found a new trade opportunity, whether it had been on this pair or whether it had been on a new pair entirely, which the Neo indicator has provided for you. Do not over leverage. That is the main thing you're going to hear from me all the time when you're using this indicator. There is no need to do it. Just be patient and wait. And you can see that if you was just waiting here, this came in on the 8th of September. And then if we go over to this level here, which is 130 pips from here, and this is by the 22nd of September. So you can see some pairs are obviously going to be slower than other pairs, but still within a week to 2 weeks, you was able to gain 130 pips from this pair. Just being patient. Forex is not a fast game. Do not blame the market for the fact that you might not have the capital to invest to make huge money. It's not the market's fault, and it's not even your own fault, but just don't blame the market. Don't beat yourself up about it. All you have to do is grind and work harder and get more investment. That's all you have to do. Just keep focusing, stick your risk management in order, and don't be entering 150 positions in the same place with no money in your account, because once again, I will tell you, I will just look at you and refer this video to you and say, but I stated this. I stated it and I said it. And I have to make sure I do this so anybody that does go through these situations, I could say, well, you didn't do your research on the situation. You have to hold yourself accountable for it. Continue, keep growing, but hold yourself accountable for not being disciplined in terms of this, especially if you have been shown about the situation beforehand. So on that note, it's your boy Big John. I told you I'm going to be giving you some ideas on risk management and stuff like that. If you want to get in depth about risk management and more about trading, then please join up the mentorship group. All the information will be in the description below of this YouTube video. Please don't forget to like, comment, share, subscribe. It's your boy Big John, and I am out.